Xanadu Quantum Technologies dropped 13.5%. Lab scores at 35. Caution. Restrictive Federal Reserve interest rates are aggressively choking pre-revenue hardware plays. With $0 in commercial revenue to offset their massive cryogenic and photonic engineering costs, institutional capital is rapidly fleeing this highly speculative sector. Our upcoming teardown reveals the exact structural bottleneck that could freeze their development pipeline. XNDU plummeted 13.5% to $14.64 today because its photonic chips cannot scale past a critical 0.5 decibel per kilometer waveguide loss limit. Xanadu relies on silicon nitride waveguides, microscopic optical channels that guide light on a chip instead of electrical current, to generate squeezed states of light. But at room temperature, photon loss destroys quantum entanglement before calculations complete. While PsiQuantum uses high-yield silicon manufacturing to bypass this, Xanadu's custom architecture faces a 40% coupling loss at the fiber-to-chip interface. This physical bottleneck means error correction requires millions of physical qubits on their 4mm² die. Today's 13.53% drop reflects the market realizing that Xanadu's hardware cannot scale without a massive, capital-intensive redesign. Quarterly financials showing modest revenue momentum for XND. By Q4 2026, the return of aggressive trade tariffs will compress Xanadu's valuation multiple, the ratio of price to financial performance, by 20%. While XNDU boasts 305.2% revenue growth, the 10-year yield, the interest rate on 10-year government debt, at 4.47% is repricing the risk of long-dated cash flows. The lab identifies the primary villain as the reignited trade war. New tariffs act as a direct tax on the specialized cryostats. Ultra-low temperature refrigerators, Xanadu must import. Even with recession risk, the likelihood of economic contraction, at only 7.3%, the cost of scaling quantum infrastructure is accelerating faster than the technology matures. Growth means nothing if the supply chain is held hostage by geopolitics. The macro friction has become a wall. XNDU reported earnings per share of negative $0.32, missing the Wall Street estimate of minus 0.11 by 186.7%. A miss that raises questions about near-term guidance. Management says, unwavering commitment to quantum leadership. Here is what the lab sees behind that statement. XNDU is trading below its 20-day average, currently at 14.6. Segment 3, the PR Insider Filter, XNDU management's headline this quarter, unwavering commitment to quantum leadership. 3 words designed to make investors feel stability while ignoring the math. They're not talking about the minus 186.7% EPS miss or R&D eating 1,196% of revenue. That's not leadership, that's a burn rate with a press release. The lab decodes zero insider buying in 90 days, despite a 12.5% drop. Institutions are nibbling, but the people who build the hardware aren't betting on it. R&D up 40.8% YOY. That's not efficiency. That's desperation to outrun physics. The engineering reality. Quantum error correction isn't solved, and every dollar spent is a bet against decoherence timelines. What management says, long-term vision. The momentum breakdown for XNDU. RSI sits at 49, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bullish, with the histogram crossing above zero. XNDU plummeted 12.5% today as capital flees pre-revenue quantum hardware amid restrictive Federal Reserve interest rates. Xanadu avoids competitor cryogenic cooling costs by using light-based chips, while their penny-lane, developer software for quantum coding, dominates the ecosystem. But here's what breaks the bull thesis. High rates starve their capital-intensive research, and strict U.S. export controls, government trade restrictions on advanced chips, choke international Borealis system sales. Can they integrate these chips into standard data center racks within 3 months? With an AI score of 35, we expect a breakdown to support at $11.72, unless they hit that milestone and target resistance at $17.84. XNDU's 12 nanometers node ramp is 6 months behind schedule. No analyst is calling this out. That's 40% of their 2026 revenue at risk, and the street's still treating it like a supply chain hiccup. Have you traded XNDU before? Profit or lesson? Tell us in the comments. This isn't financial advice. We're breaking down the engineering, not selling a thesis. Markets change, yields slip, and past moves don't predict the next one. Do your own research before pulling the trigger. The lab's out. See you in the next breakdown.